and a lot of this data will start looking better.
I'm inclined to believe that you just starve the fever. You starve when you have the fever, take the poison out, and one hopes that the body politic and the body economy is now ready for more growth. I take that point completely. But
to interrupt you, Lata, for a moment. I want to interrupt.
Rhythm, you don't have the anchor show.
No, I want to interrupt her because I want to interrupt her. I know this is prime time television at 3:15 in the afternoon. The market is closing. It's sub 8,000. It's a mess out there. Investors are depressed. We don't want to discuss the market. I want to ask Sonia a question.
What?
Sonia, if
Why
you...
me again?
I'm going to ask Nimish also. I'm going to ask Nimish also. So, Sonia, you've been doing this for a while, right? If this was not your job, if this was not something that you would have done, what is the other thing that you would do in life?
Not right now. Maybe later. Maybe after 15 minutes after the market.
No, the market. We don't want to focus on the markets. The markets are terrible right now. Nobody wants to look at the index. Okay, Nimesh, she doesn't want to answer. You answer this question.
I don't know. See, I was anyway a journalist. So I would have been a journalist because I guess that's been.
So if you had not been a journalist, what would you have been?
I never thought of it, frankly. It's been I guess in my blood. My dad was a journalist, so a journalist is something which comes to me very natural. And I would have been a journalist, if not a television journalist, maybe a print journalist.
Do you agree? Do you agree?
Rhythm, would you have been if you were not in the market?
I'll come to that. But a lot of people give a lot of hard time that journalists, do a pretty bad job. There's this constant buzz about how poorly journalists do their job. What do you have to say about that?
No, I think
let's catch this off cab.
I think he's first trying to take our jobs, and now he's trying to destabilize both of you and take both your jobs. No, we don't agree with Rhythm at all. Just a final question to Sanjay. Sanjay, do you think the global negatives we are getting in terms of high bond yields can seriously destabilize flows coming into India? We hear that even today there was a lot of ETF selling. So should we be terribly worried about the global peace?
Can they destabilize? Yes. Can they terribly destabilize? No. And the reason is simple, right? If you look at the fiscal balance sheet, it's never been stronger than it has been now in the last 10 years. If you look at the current account deficit, we are down below 1.5%. If you look at the foreign exchange reserves, we are at a lifetime high or at a significant high in terms of the foreign exchange reserves. If the sovereign balance sheet is so strong, even if there is some destabilization in terms of yields going up because of Fed rate hike, I'm not too sure whether flows are going to suddenly exit out of India. There could be some destabilization as it could be elsewhere. But I think India is in the least vulnerable position it has been in a long period of time.
Okay, that's very...
one thing I've realized.
Yes.
You can't...
Yes, go ahead.
No, one thing I've realized is we were having a couple of minutes of fun here. The markets are so depressing, but you want to go back to depressing things.
You're not going back to depressing things at all. After all, investors should not be making money when markets are heady. They make money when markets are low. So actually, we are in pleasant times. Rhythm, Sanjay, thank you very much. And I envy you, Sonia and Nimesh, for the fun you are having.
No, Lata, I just have one last question to ask Sanjay before we wrap up. Because this was a question I have been itching to ask him with regards to what investors should be doing at this point. The Sensex is down almost 500 points right now. If one is looking to buy, what are the pockets that one should go and jump into?
In terms of sectors?
Yes, in terms of...
I think you have to go into the strong balance sheet companies. I think the market is going through a catharsis. A number of business models have just failed. And a lot of people are intent on putting good money after bad into those business models, thinking that the stock prices are cheap. You don't buy cheap in India. You buy growth, you buy quality, you buy strong balance sheet.
So the sector leaders like the ICICI banks,
I'm not going to individual stocks, but we love the private banks. Okay. We love the consumer discretionary names. Okay. We in fact love even the capital goods companies and the proxies to the investment cycle. Okay. And the select pharma and IT companies. So those are the pockets in which I would continue to stay invested. By the way, these are the pockets I would continue to stay invested in, regardless of whether the markets are going down, whether the markets are going up. Because if you look at the last 10 years, 20 years in India, it's the same set of sectors and stocks which have continued to give returns over a period of time. Now, you can decide to put more money, less money. That's a different thing. But I don't think the selection of stocks and the selection of sectors changes too much.
See, I'll give you a line for this show. I think it's time to take your shopping bags out and go and buy stocks.
All right, on that note, we'll wrap up. Lata, over to you. That's the word coming in from Rhythm. It's time to take your shopping bags out and go and buy stocks.
All right. Thank you very much, Rhythm, Sanjay, Nimesh, Sonia, for that entertaining half hour.